Good afternoon. Thank you for joining us today. We're excited to have the opportunity to speak with you a little bit about healthcare on this panel. My name is Shannon Susko. I'm an Executive Vice President of Financial Communications and Healthcare at Edelman. And I have the exciting opportunity to introduce you to this esteemed panel today, one of which is here in person with us, and two of which will be joining virtually. So starting first here in the room, I'd like to welcome Luke Bars, the Managing Director and Head of Fundamental Equity of Client Portfolio Management for both EMEA and Asia from Goldman Sachs.
Thank you, Shannon. Lovely to be here.
Wonderful. And joining us remotely is Alex Cogut, the Co-Head of Life Sciences at Kempen, on screen here.
Thank you, Shannon.
And Dr. Michael Schröter, the Co-Head of Sustainable Healthcare Equity at HSBC.
Good afternoon, everybody.
Wonderful. Well, we're thrilled to be here today to spend a little bit of time talking to you about healthcare. Edelman recently conducted a healthcare investor trust survey of about 225 institutional investors, totaling about 3 trillion AUM. And more than 78% of them have increased their healthcare allocations in the last 12 months. There's no doubt it's a fascinating time for the sector, particularly against the backdrop of the global pandemic. And with that, we're excited to talk a little bit about some of these trends as we look back on 21 and reflect ahead for 22. So to start us off, as we approach 2022, as we look back, what are the themes that you think will be the biggest drivers of healthcare in the year ahead? And we'll start first in the room with Luke.
Yes, I'm going to take a liberty, if it's okay, just at the beginning, because I'm going to give you two. The first is very much for 2022. We see significant challenge in drug supply chain. That's obviously been very evident over the last 18 months or so. The demand we have for COVID vaccines has effectively dominated the supply of largely every other drug, and we don't see those constraints really relinquishing through the course of next year. And so there is for us actually quite a bullish outlook for those companies that are well placed to deliver on that supply, but it is quite constrained. I think what will probably be less obvious in the course of the 12-month period, but probably the most cataclysmic change in terms of the industry, is what we're seeing around genomic technologies and precision medicines. So this move away from one-size-fits-all solution to very personalized treatment, from the reactive approach we have to healthcare to preventative healthcare. And really the big shift we're seeing, and it has been very apparent over the last few years, is this decline in cost curves around genetic sequencing. So sequencing the human genome, I'm sure many people are aware, the first time that was achieved, 2003 Human Genome Project, cost roughly $2.5–3 billion, took 13 years to conclude. We're now at a point where we can effectively do that same technology. We can sequence the full human genome in the course of a few days, and we can do it for roughly $500 or $600. And what we'd expect to see over the course of 2022 is actually that cost decline coming down even further, likely in the next 12 to 18 months, where we can see that sub $100 and even 24 hours to do that in totality. And what that gives us is a huge amount of incremental data that we can start to assess and try to apply to deliver much more specific, precise solutions to areas like targeted oncology, cell treatments, where you can actually start to understand how an individual disease is attacking the individual, as opposed to just holistically trying to solve for it in one-size-fits-all approach. So that, I think, is going to be a very significant shift as we go forwards over the next decade, very much underpinned by what we're likely to see through the course of 2022.
Absolutely. No doubt an exciting time as we look ahead. Dr. Schröter, if we move next to you for your insights on the year ahead.
The key driver in healthcare in the coming year, as well as the foreseeable future, we see is the change in customer needs, which is reshaping the entire healthcare industry. Additional demand for healthcare is driven by a growing and aging population, and industry is addressing that need through innovative products. These innovative products have delivered tremendous clinical benefits to patients over the last decade or so. However, along with that, healthcare costs have literally exploded. So as a result of that, payers, be that governments or insurance companies around the world, have been forced to restrict what and how much they reimburse. And as a direct consequence of that, patients are now suffering from access restrictions to needed care. That is bad for patients and society, but it's also bad news for companies, which can no longer maximize the revenue potential of their innovative products if they do not address rising healthcare costs. So as a result, in 2022, we will see an acceleration of the customer needs away from innovation at ever higher prices, which nobody can afford anymore, towards innovation with a dual purpose of delivering improved clinical benefits to patients while at the same time reducing overall healthcare costs. So reducing healthcare costs does not necessarily mean selling innovative products or services cheaper, but rather for innovative products to enable cost savings elsewhere in the system. So for example, for a new innovative treatment to reduce the days that the patient spends in intensive care can help avoid hospitalization costs. Or a new diagnostic test which detects a disease early and enables early treatment results in a better clinical outcome, as well as reduces treatment costs. There are many ways companies can ensure that their products are affordable without sacrificing profitability. Actually, on the contrary, by addressing customer needs around rising costs, companies will face less access restrictions imposed by payers and therefore will be able to maximize the revenue potential of their innovative products. The trend towards affordable innovation has already started and to reshape the healthcare industry, with companies actively seeking to address this new customer need on one hand. And on the other hand, there are still companies unable or unwilling to change their business model, which are starting to suffer from the consequences. So the motto for us, in 2022 and beyond is change in customer needs equals opportunity.
Interesting. Thank you so much. Alex?
Sure, yeah. So, I hate to say it, but I think that the context is important that, I still think we will not be able to ignore COVID. So in the best case scenario, dominant variant emerges, perhaps it's Omicron, which results in COVID becoming endemic like the flu. Worst case is we see a meaner virus with higher transmissibility that can evade existing immunity conferred by the vaccines and prior infections, and that can maybe even lead to more severe disease. Now, my best guess is that we have a similar dynamic to this year. So we will have on and off periods with new variants popping up with various degrees of concern, especially since the vast majority of the world is still not fully immunized. So at the same time, the good news is that we do have all the tools to fight this, and we are able now, as a sector at least, to respond quickly to changing dynamics with the virus. So apart from that, I think the pace of innovation is truly accelerating in healthcare, and we, with the backdrop of funding in the private environment really skyrocketing over the last 2 years. We're seeing the treatment toolbox expanding with a multitude of drug modalities. So just to name a few, next year I expect we will know more about the use of mRNA vaccines for other infectious diseases. It will be an important year for clinical validation for the field of targeted protein degradation, which is an exciting mode of action with a small molecule. There will be significant developments in the Alzheimer's field, like both on the payer side as well as on the clinical side, and many more developments in the cell therapies, gene therapies, and gene editing space. So importantly, many of these novel treatments types will generate data in patients next year. So that's always quite high risk in biotech, but taking the sector as a whole, while some of these innovative modalities will fail, many will lead to transformational changes for patients. And we have many more shots on goal as a sector overall by the virtue of the different treatment modalities compared to the past. Now, how the market will react to this development depends a bit on the broader financial context, so which appears to be signaling a tougher year for equities in general.
Absolutely. Moving ahead a little bit to take a deeper dive on biotech. In the last year, there are several key themes that have come to light when we think about the performance of the biotech market. The increasing number of companies, preclinical companies, going public. IPO valuations for early stage biotechs at astronomical highs, and a growing number of biotechs who IPO'd and have since traded below their offering price. What are your expectations for biotechs in the coming year, and what opportunities does the underperformance of the last year present for investors? Let's start for this one with Alex.
Thanks. Yeah, so it's quite interesting, as we've had 2 extremely strong years for biotech IPOs. But as you mentioned, many of those companies were at an earlier stage than the historical norm, many not even in the close to entering clinical trials. To some extent, this wave of IPOs was driven by sort of exploiting a financial arbitrage between the private and the public market, which this year clearly didn't work so well anymore. So, and hence, you have a good number of newly listed companies trading below issue price. Now, I think within the wider context, as previously mentioned, while broader equities had continued their bull run, the biotech sector was pretty tough for investors. I think probably down 20-30% overall. However, this is presenting at this point an interesting opportunity for stock pickers to buy some great, relatively de-risked, more mature biotech companies at relatively lower valuations. So this is also, as we go into the new year, particularly interesting since M&A was not a big driver this year. But I think fundamentally, pharma still needs to look externally for innovation. Mm-hmm. And these type of more mature companies that have some validation behind them are what they will be looking for into the coming year. So going into next year, I think it will be definitely more difficult to IPO preclinical, sort of undifferentiated biotechs, especially when investors can pick up companies that have already some validation behind them and near-term inflection points ahead.
Michael, your thoughts?
Yeah, I agree with Alex. Just when you look at actually over the last years, we've seen the emergence of new therapeutic modalities, new business models, the integration of technology into healthcare and more. Just think about mRNA technology. 2 years ago, most people never had heard about it. Today, we can't live without it. And like mRNA, there are many other technologies currently under development, just waiting for their breakthrough. And that is exciting for patients, but also for investors. However, it is not only about innovation, as I mentioned before, but companies need to also address, in addition to the innovation, the growing customer demand for affordable innovation. Again, affordability doesn't necessarily mean cheap. It can very well mean high-priced therapies, medical devices, diagnostics, services, but which help payers to reduce overall healthcare costs. So looking at healthcare investments, traditionally, over the mid to long term, healthcare has outperformed the broader markets, and small and medium cap companies have traditionally been the growth drivers in this sector. The underlying demand for healthcare is unchanged. You could even argue that with Cogut it has even increased. However, what has changed is the changed customer needs, and therefore winners of tomorrow will look differently from winners of yesterday. And that needs to be taken into account when investing in a diversified portfolio of healthcare companies. So the current underperformance of the healthcare sector, agree with Alex, it's a nice opportunity for investors to make investments in that sector again more attractive.
Luke, would you like to weigh in?
I just make one small point here, which is in agreement with everything that's been said so far, but one area we actually see that could be very interesting as we see the developments in biotech over the next decade is actually what we're seeing coming out of China. Not because the efficacy or the quality of the science is comparable to what we see in the US, but because you have a world where China is likely a little bit more geopolitically isolated and recognizes that it has to uplift technologies domestically to become more independent. So specifically, if you think about the aging population in China and the ability to access and leverage some of those new solutions and treatments and cures that are coming through in the US biotech space, it's very unlikely they're going to be able to get access either because of geopolitics or because of the willingness to accept patent rights and hence the pricing aspect of what that means for a broad market Chinese consumer. And so they have to develop their own underlying capabilities, which again, might not have the efficacy of what we see in the US, but if it can be delivered to a 1.5 billion population at a lower and more socially acceptable pricing point, could have major implications for the evolution of the Chinese economy, but actually could be very profitable for those businesses as they start to develop in a world where barriers to entry are still likely very high for international competition into that space.
Interesting. Are you seeing similar trends and interest in the Chinese market, Alex and Michael, or are you focused primarily on US and European biotechs?
Very much agree, with what Luke said. Just to add to that, I think in addition for Chinese companies to serve actually the local market, what we're starting to see is innovative companies which bring innovation close or at par, to Western innovation, also to Western countries. And I think the interesting thing to watch moving forward will be, will they use actually their large homegrown market as a base, to also enter US and European markets at a lower price than what is already currently for comparable therapies on these markets. So that could be quite disruptive moving forward.
Alex?
Yeah, it's becoming more of a topic indeed from the perspective of what Luke has shared, that it is a large market, even if you charge a tenth of the US price. At the same time, I think as an investor, it is quite tricky to be sort of safely exposed to that market. So either you are doing it with your sort of feet on the ground with local partners, otherwise you are taking significant political risk. And I think we were seeing that with the sort of the internal flag that companies are getting for listing in the US on NASDAQ, and the structure that allows that, it might not be as protective to investors as they would prefer.
Can I make one small, just final point on that, which again, it's very nascent, but the introduction of the STAR market in China, so it's an off-market exchange, if you think of Shanghai, which is their de facto NASDAQ equivalent, has, and I'm not saying it's done it perfectly, but it's given some of those earlier stage innovative businesses access to public capital in a way that they wouldn't previously had. So that, coupled with some political tension for those companies to list domestically as opposed to going to US and elsewhere, and the change in operational requirements for those businesses to come to market earlier in their life cycle, notwithstanding anything Alex said, which is, I think, accurate, does hopefully give you a little bit more of a fruitful ecosystem for that innovative culture to develop.
Absolutely, and likely accelerates progress for earlier stage companies faster than would otherwise be the case.
For sure.
Which certainly is good for innovation broadly. I want to shift gears now to talk a little bit about ESG. For those of you who've been with us throughout the day, you've heard ad nauseum about the important role and increasing role of ESG across the board. And so, when we think about ESG, the survey that I recently touched on showed that 81% of investors believe companies with strong ESG performance deserve a premium valuation to their share price. So there's clearly an increased focus on this. I want to take a couple moments to talk about two parts here. First and foremost, how has the transparency of ESG reporting improved the healthcare sector and your likelihood of investing? And then secondly, where are we in the pendulum swing with ESG being a source of alpha? Or at this point, is it just a qualitative preference for investors? Let's start first with Michael.
ESG has certainly gained in importance in healthcare as it has in other sectors. For large cap, we've seen improvements in reporting and transparency over the years, and we have seen progress and efforts made by companies to improve on their E, S, and G scores. For smaller companies, the administrative burdens of ESG reporting often results in a bit more spottier picture. Though, spotty reporting does not necessarily mean that small mid-cap companies do not care about ESG. In fact, very often when you engage with these companies, you see that also these companies make progress with regards to ES and G topics. But I think while ESG has become more important in healthcare, we should not forget that ESG criteria are not really sector-specific and hence do not take sector-specific challenges explicitly into account. And for the healthcare sector, for example, this means that widely recognized is that healthcare costs pose the biggest single threat to sustainability of healthcare systems worldwide. However, that is not reflected in the social dimension of ESG. And therefore, if you want to use ESG as a source of alpha in healthcare, we need to complement traditional ESG metrics with a healthcare sector relevant dimension with regards to companies' contribution to address rising healthcare costs. And in fact, when you look at, we start to see increasingly companies which build the goal of affordable innovation directly into their business models. Or in other words, sustainability becomes their business model and it becomes a competitive advantage. That has true impact and goes beyond just, let's say, the ESG scorecard in our view.
Yeah, I would take it from our perspective as long-term equity market investors. And so ESG isn't about a value alignment proposition. It's not about saying, oh, I care or I don't care about certain things. Qualitatively, it's saying, okay, if I'm going to buy a business and look to own it for 10 plus years, do I have confidence that the practices embedded into that business are sufficiently sustainable that I can get to the right financial outcome? So I think there's inherently a need to understand within that what is material within the healthcare sector, because it is distinct from what we see in other places. I think it's fair to assume that all of the discussion we have around carbon intensity and some of the other areas that are in focus due to COP26 are relevant, but far less material, arguably, to the long-term financial viability of companies within the pharmaceutical or healthcare space. I think for us, the engagement work we've done with companies has been very focused on pricing. What is year-on-year pricing for some of these businesses? Understanding, of course, this is a for-profit enterprise. You have to fund innovation, but we also want to be very sensitive to how pricing is evolving year-on-year and whether there's any emphasis on trying to price gouge where you have monopolistic access to a specific area of the market. I think within the last 12 months as well, understanding what companies have done with government funding. We've seen a huge flood of government capital to try and solve some of the issues around COVID and develop vaccines at a faster rate than we've ever seen before. But really, the transparency around that for many businesses has not been that apparent. So trying to engage to understand on that front has been pretty critical as well. And so I think as we get better overall understanding of the issues, we can start to make slightly better investment decisions around which are the sound businesses that we're happy to own and effectively buy into management teams, buy into capabilities for the long term, as opposed to just trying to think about the short-term dynamics of what is the market going to do over the next 1 quarter or 2 quarters. The one issue I would say we're very likely to take up again in the next 12 months, which is to a degree just been given a pass over the last year and a half, is single-use plastics in the healthcare sector. Because if you think about the waste issues we have and the focus that has been on single-use plastics, effectively COVID has given a lot of these companies a bit of a pass, understandably, but that is an area where, again, we want to see better innovation to build more sustainable practice than we probably currently have.
Alex, would you like to weigh in on this one as well?
Yeah, so I mean, I work with the smaller biotech companies, and the epicenter of biotech funding is US. So I do see a big difference between US and European investors in how they sort of look at these Gs. I think in Europe, next to the ESG specific funds, you're now starting to see sort of ESG questions and requirements trickle down to the more generalist or specialist funds that don't necessarily have the criteria in the past. While in the US, it hasn't really been trickling down as much. So I think for small biotech companies that are still need to raise money year over year, it's not necessarily a topic they proactively address. So it's coming up more and more, but given the funding comes more out of the US, it's less of a topic for us.
Out of curiosity, wondering what you all think about rare and orphan disease. When we think about costs and sustainability and access, obviously this is kind of a challenging space. The dollars invested to help small populations with very high drug costs run counter to some considerations on the ESG front. So curious how you think about this. Would you like to start?
Well, I'll make a small comment. I think Michael made reference to this earlier as well, which is, of course, we have to recognize the pricing environment for certain treatments and cures is going to be elevated because the cost of funding that research is so high. But it's too simplistic just to say high cost is bad outcome, but actually if that can help solve what is otherwise a very challenging and often costly illness or disease that has a burden on the broader healthcare sector, then there is actually a way to find a little bit more of a level set around that. It's sensitive, and I think, again, where we focus on is trying to understand the cost of research and what the appropriate pricing should be for that on some normalized IRR. And if you get the sense that actually there's an exaggeration of that and there's some price gouging to take advantage of what is clearly a very unique technology or capability that is inappropriately priced that create or amplifies social anxieties within that space, we're going to be a bit more sensitive to those issues.
Absolutely.
And perhaps just to add to that, I think when you look at rare diseases, I mean, rare diseases make about 20% of a payer's budget to serve about less than 2% of the patient population which a payer needs to cover. Take then within rare diseases, I mean, a growing area, a growing subset of treatments, gene therapy. Gene therapy, you have now treatments which exceed the cost of $1 million to treat a single patient. And you have literally, a handful of these kind of therapies right now on the market at these price tags. But you have over 400 in clinical development, each one eyeing such a price tag. And that's where I think the kind of sustainability question comes in. How do payers square off their finite budget to make that happen? And I fully agree, with Alex that you need to reward innovation. You need to make it attractive for investors to invest in these sectors and for companies to make money. But we need to keep in mind, how do payers in the end, meet their ends and to square off their budget, given that avalanche and literal tsunami of rare diseases which is coming towards them?
Alex?
Yeah, so it's a highly complex question, obviously, and not one that has an easy answer, because on the one hand, I think governments are underestimating the amount of treatments that will be approved at the very least for rare diseases, and either in Europe or in the US. You have different models of how governments or payers, private and as well as public, are looking to tackle it, but I do think they are underestimating the amount of treatments that will come to the market. And then, it will be quite a challenge when you have a life-saving drug to withhold that for years until you are, finally able to negotiate something with the pharma company. At the same time, I do notice quite a contrast between indeed that economic reality that we're all kind of seeing, and also what Michael is describing, and how investors in the early stage biotechs are thinking about it. It's, the assumptions are still kind of that we'll be able to keep increasing drug prices forever. And I think until we have more concrete cases of how governments are more structurally planning to address that, I think that stark disconnect will remain.
Absolutely.
Perhaps if I may, just
Sure.
to add one more point, to that discussion, I think what we also see, with these high-priced therapies, are approaches to pay differently for these. Either towards outcome-based payments. That really payers are only paying for performance and not upfront, just to obtain a therapy. And that is difficult to implement, but it certainly helps then spread the cost, and de-risk the whole investment for payers. The other kind of models, we're starting to see are more kind of amortizing models, or where you pay for a therapy over a period of time, as that therapy kind of still shows efficacy over time. So I think to get there, though, really payers and industry will need to work together to pull these kind of new payment modalities off moving forward.
It'll certainly be interesting to watch the evolution of that, particularly given the history between payers, providers, and pharmaceutical companies in the past. That seems to be a challenging operating model. Moving next to something that's top of mind for all of us. We've seen the news of the recent days about the Omicron variant, and we've seen the impact of the pandemic on the last 2 years actually, on everyone, but particularly on the markets and the volatility and fluctuations that have resulted. With the news of Omicron and the uncertainty of impact that it's going to have, how are you thinking about this as far as your outlook for 22? And secondly, in what ways, if at all, do you see the vaccine and therapy producers taking on the merits of a long-term strategic investment versus being a kind of tactical portfolio tool to navigate the volatility of this pandemic period? Let's start with you first, Alex.
Yes, I think that companies that brought mRNA vaccines on the market for COVID are obviously seeking to leverage the technology in other infectious diseases, as well as oncology. We've also seen important additional investments in the technology from big pharma. So I think to a large extent, mRNA is becoming a big pharma game. Now, there's similar dynamic on the therapeutic side, as we've all seen in the news, with the more established companies kind of leading the charge and bringing treatments to the market. So I think irrespective of how COVID develops next year, all of these companies are highly incentivized to continue investing in the infectious disease space more broadly, while in the past, big pharma tended to be quite slow in this area. So I do think they will try to keep momentum going. For COVID specifically, I think that the next frontier is to achieve vaccines with a longer duration so that we don't require repeated boosters and perhaps vaccines that are more universal. So within this context, I believe smaller companies in the COVID space will struggle to execute on their promises as the bar for vaccines and therapeutics is ever increasing, as well as the funding requirement to get there. So I think it will be a tricky space for investors to navigate, I think.
Michael?
Well, as COVID-19 becomes endemic, society will need to learn to live with the virus as we do with other viruses like the flu virus. And COVID vaccines and treatments have shown their value during the pandemic, and will continue to play an important role moving forward as we will require regular seasonal vaccinations and treatments for infected patients. We should also not lose sight of the fact that COVID-19 will likely not be the last pandemic. Actually, when you look at the global warming rate, pandemics are anticipated to emerge more frequently. We will hence need the same technologies we're using now to fight the pandemic, even more so moving forward, as well as new and more advanced technologies. So more broadly speaking, though, beyond COVID, COVID has also reminded us all of the value of being healthy and the benefits of preventing a disease from happening in the first place, rather than treating a disease at an advanced stage. And this applies to all diseases, not just COVID. And as such, we see an increased investment by governments, payers, and patients to invest in their health of their population and everybody's individual health. So if anything, the need for more innovative, more advanced healthcare solutions will continue way beyond COVID-19. And that is a fantastic opportunity for the industry to further demonstrate its value to society, but also for investors to enable that journey and to benefit from it.
Yeah, I think from our perspective, and just to be very specific, if we think about the vaccine developers as it relates to COVID, we'd be a little bit more bearish there. We think a lot of the runway for those specific vaccines is priced into current share prices. I think there's, obviously to Alex's point, a lot of the applicability of those same technologies and capabilities to other areas where we can see a lot of future potential and growth. But obviously that's a little bit more speculative, and we've still seen a little bit more of an expectation that some of those companies can continue to benefit from distribution of vaccines for many years in a way that we're maybe a little bit less optimistic about. I think the one thing we've acknowledged post-COVID, or at least having seen the last 18 months, is that there is this shift in mentality that we've kind of referred throughout this session on amongst governments to recognize that healthcare provision is not just a social issue, it's actually also in many cases a national security issue, right? If you don't have effective, cost-efficient delivery of healthcare to your population in times of pandemic, that can become a very significant, not only economic issue, but also just general security issue. And so how governments adapt to a world where they need to continue to fund and develop and drive innovation in those areas in a way that does reward private sector enterprise, but also recognizes some of those social challenges is going to be something that I think is very interesting. And in our mind, whilst we have to be sensitive to the pricing environment, as we said previously, a lot of those earlier stage biotech companies, if they can prove the efficacy of some of those new solutions, are poised to do incredibly well over the coming decade.
We've talked a little bit about access and innovation. Certainly digital health and health tech companies have been a beneficiary of some of the COVID tailwinds in terms of greater evangelization and access. Curious your thoughts on whether this trend will continue as we enter this more endemic phase of the pandemic and with potential future considerations for access to care in light of pandemic situations. Michael, let's start with you first.
We certainly believe, that it will continue. When you look actually pre-COVID, then things like technologies like telemedicine, started to plateau because the early adopters, adapted it, but then other patients, were more reluctant and preferred to continue to engage with their physician in the old way, face to face. pandemic has totally changed and has radically kind of accelerated the whole sector of digital health. That adoption, while it has peaked during the pandemic, it's coming back a little bit again as people can go again face to face, see their doctor. It's not going away, and we will see not only a higher adoption of telehealth solutions, but also other digital health solutions. Where, for example, digital health solutions which serve as a, so to speak, digital pill. So I think digital is here to stay and will help healthcare to become more productive moving forward.
Alex?
Yeah, so I think there are a couple of points here that tie into what we previously discussed in terms of maybe prevention and staying healthy rather than having to be treated for something. And many of these solutions come with either diagnostic tests or screening tests, if you will, or perhaps all kinds of sort of health tech solutions. I think that the issue that often plagues these initiatives is that the burden to prove clinical utility, as in, are you actually impacting in the appropriate way somebody's healthcare treatment, it is quite high. And in many ways, again, tying to something we discussed, particularly in European countries, there's less of a willingness to adopt all of these sort of more or less preventive systems. I think there's a nice example out there of a company that has developed a pan-cancer screening test and has so far chosen not to launch it in Europe due to this sort of adverse reimbursement environment. So all these solutions are very nice on paper, but it is quite burdensome to get them adopted by payers.
An ongoing challenge across markets for sure. Yep. Luke, any thoughts on digital and health tech?
Look, I think the expectation is it's here to stay in some capacity. To Michael's point, we saw a period during the last 18 months, which probably, at least touch wood, is not something we have to necessarily deal with going forwards, but at least it forced adoption onto platforms that can have some benefit in terms of broader cost efficiency of delivery of healthcare. So I think the expectation is there. We'll continue to see innovation in that space, but I think it needs to be in balance with your kind of traditional in-person treatment.
Absolutely. We do have a few minutes left before the end, so I will check and see if we have any online questions, or if not, if there's anyone in the audience with a question for our panel.
Hi, Ian Day, home team, Edelman. Quick question. Someone just mentioned, I can't remember which panelist it was, to be honest, but I heard the suggestion there's a correlation between global warming and the probability of pandemics. For the scientifically less literate among us, could that comment be explained, please?
That was Mike.
I think, Michael, you commented on that.
Yes. So, let me step back. A lot of the kind of viruses, they are already around somewhere in nature. And it's just a question that they jump over, from animals to humans. With global warming, with the impact, society has on the environment, human beings get closer and closer to these more remote kind of areas where still, we have these kind of, let's say, new viruses. So there is, on one hand, that extrapolation that the probability for these viruses to jump from animals to human will increase as we see an increase in global temperature, number one. And number two, is that we will also potentially, that's still to be seen, with global warming, potentially the release of new viruses which have been around, but not being transmitted in the past, being released from permafrost and other areas, which could impact again, human beings.
You see it a lot in terms of just the destruction of biodiversity, and so as human society gets closer to Michael's point, areas that probably haven't been accessible for a long, if not forever, that becomes more of an issue.
Thank you.
Yeah, I mean, you do see simply, tropical diseases, what was considered tropical, moving into sort of the northern hemisphere, many of those are not even new diseases, so to say, but existing ones which they've been trying to deal with since for a very long time in those warmer climates. Like a very concrete example is, just look up the incidence of Lyme disease that's going up into the northern US as well as in Europe, and that's something that we've never had to deal for in the past, and it's just driven by ticks being able to sort of proliferate when the climate is warmer. But that's just something that will be accelerating.
Thank you. Any further questions from the audience? Okay. Well, I'd like to take this opportunity to thank our excellent panel today, and for all of you for joining us. As a reminder, there is a coffee break following this session, and we look forward to engaging with you again following that break. Thank you.
Thanks, Liz.